Welcome back to the Retire Young radio show. I am your host, Joshua David, always having a good time talking about the financial markets and helping America with better financial literacy. Also, don't forget to subscribe to the podcast on Apple Podcast, iHeartRadio, and Spotify. Al, as we get into this next segment, and we have a few topics I want to talk about. I want to talk about the smart money, but also the different assets that they are trading. Mm-hmm. Now, we all know the stock market. It's a phenomenal market. We've seen a great year in the stock market, up and down. There are some great opportunities in both directions. But there's also other assets that the smart money is using to create income. There's a couple perks they have along with them. So I want to kind of unpack that a little bit. So first off, what is the smart money doing a little bit different in their, we'll call it their income accounts, than the public is doing before we talk about the other assets?
Well, first of all, the smart money, we're talking about the big institutions, the brokerage firms like Goldman Sachs, hedge fund managers, big time investors. That smart money, they understand the value of short-term trading, and that's where you are getting into and out of something, sometimes on a daily basis, sometimes weekly, maybe monthly. But that's where you generate extra cash on a short-term basis. And for a lot of people, that's something that's very important now. If you're still working, you're kind of still in that accumulation phase. Maybe a little extra in addition to what your job covers will help out not only with what you want to do now, but also
the potential of that.
The potential, sure. Nothing is 100%. We want to make sure people understand that. That's why it's so important to have the proper education that really covers every aspect of a trade. Manage every aspect of it. Sometimes you're right, sometimes you're wrong, but you can manage both to your benefit. But the key is to have the right education, and one of the components of proper education is knowledge about these different assets that the smart money is using. So if your goal is not just to put something away for the next 20 or 30 years, but maybe to use something now for emergencies or a little bit of fun, to have the potential to have a little extra for that, well, maybe look at some of the things that the smart money is doing. They're trading assets like futures, Forex, options. And those are things a lot of people either aren't familiar with or know just enough about to be afraid of them. But it's just simply because you don't know them. You're not being taught them. Certainly you're not getting that in school. The brokers are not teaching that. Financial advisors, for the most part, are not, because it's much better for their business to put you into a long-term portfolio, basically made up of mutual funds or some kind of a preset portfolio.
Yeah, it's really cookie cutter is what that is.
It is. You may be put into a type of investment or a portfolio that maybe thousands of other people are in exactly the same, without really a consideration for you specifically. Mm-hmm. And that's what we want. We think it's important that everybody have something that is specific to them. That should be part of your plan. Yeah. But regardless of whether you are trading these short-term vehicles or you're investing long-term, the key is to identify a quality trade. And that really simply is one that has the lowest risk entry point with a high probability of succeeding and a high profit potential. That should be for any asset, any type of a investment you make. And to do that, that almost always happens, those quality trades at or near the turning point in price. And those turning points in price always happen when supply and demand, in other words, buyers and sellers, are out of balance. But it has to happen in enough quantity to be able to move the price of something. You and I can't do it, Josh, no matter how much money we get by selling everything we have. We're not going to move the price of something.
It takes millions and even billions of dollars to do that.
Yeah. Somebody like Warren Buffett, for example, he took a 64 million share position in IBM at one time. That's a lot of shares.
That's a few bucks.
Well, we're talking in the billions, and most individuals don't have that kind of money. But that's enough to move the price of something. So what we want to do is just be able to follow what they're doing, because they're telegraphing to us. So regardless, again, of what the asset is you're trading, whether it's long-term or short-term, know how to identify those quality trades, and then get some knowledge on these assets that are short-term. The futures market, for example, where you can trade a number of different things, almost 24 hours a day. Forex, 24 hours a day, excuse me. Options do not trade 24 hours a day, but they all have leverage, which means you get a multiple of your investment. So a large investment can be held with a small kind of upfront, almost like a down payment. And that's why these institutions use it, because it really boosts the power of their investment.
Yeah, I want to dive deeper into what those are coming up here next. But I mean, if people are looking for that short term capital like the institutions are doing it, that accumulation phase, you want to be in the proper assets to do that and to be able to utilize the leverage as Al was talking about. And the key is in these institutions, as he was talking about the Buffett, trading millions and millions of shares at a time, they are telegraphing their hand. Really, they're showing their hand at the poker table, and it's based off a price chart. That's where we're looking to identify that, or have the potential to identify that with low risk, high reward, high opportunity points in these markets, and that's proper market timing. Let's explain let's start out with the Forex market, just because that's been such a phenomenal market in 2020. Great action, great movement. What a lot of people really like about the Forex market is it's a slow mover. You have the volatility, but it moves slow because it takes countries a long time to change their monetary policy. So what is the Forex market?
Right. Well, the Forex market is where you're looking at the difference in exchange rates between two different currencies. So you're really trading globally, and we have really become, much more tied together globally over the years. So this allows people to participate in what might be happening in other parts of the country. It can be used for, the shorter term trades, but also it can be used as a great asset in your retirement accounts for building wealth. So it trades 24 hours a day. Look at a 50-to-1 leverage there. What that means is that every dollar that you have in a margin account has a possibility of controlling as much as maybe $50 worth of the investment. That's maximizing the value of your investment money. 24 hours a day gives you some great opportunities to not have to be available just during the 6.5 hours that the stock market is open. Major companies use the Forex market because they're dependent upon what's happening with currencies in different countries where they do business. But it has opened up a market that is not only a great investment vehicle for us, but it also has the greatest liquidity of any market. And by that, I mean it trades $5 trillion a day.
Was that with a T?
That is with a T.
Wow.
Right. And that's more than you and I have together. Which is
I would assume so.
Yeah, we're working towards it, but no, that's a lot of. It's bigger than all the stock markets combined.
Think about that. The Forex market is larger than all the stock markets in the world combined.
Right?
How great of a market is that when you have that liquidity?
Right, and that's really important. If you are looking at getting into and out of something, you have to have the volume there. It has to be liquid enough where you don't have to worry about trying to find somebody that will be on the other side of your trade. And by the way, these leveraged assets that we're talking about, including Forex, that's the foreign exchange market, by the way, they are also great assets to use, not just in up markets, but in down markets. And we have to accept the fact that the market moves three different directions, up, down, and sideways. Most of you listening are only in an investment vehicle or type that will only benefit you if the market goes up. Well, what if it goes down? Because it does, and it will. These leverage assets can be used as short and long-term positions. By short, I mean that you are basically selling something to benefit from a portfolio, or not a portfolio, but an asset or a market that's going down in value. And options, by the way, can be used in up markets, down markets, and sideways markets. So you have a lot of opportunities there, but the leverage is a huge part of it. The futures market, that's another leveraged asset.
What is that market? Explain that.
That's another almost 24-hour-a-day trading market where you are basically looking at what you feel something will be worth in the future. Will it be up? Will it be down? And you can play both directions there. You're looking at a number of different choices. It's the number one best diversification asset that you can find, because there are things that you can trade there that are correlated to each other. So in other words, if one's going up, another one should go up. There's some that are inverse correlated. So if one's going up, one should go down. And some have no correlation at all. So you have the ability to really do true diversification. You can trade the major stock markets. So if you are a stock trader and you think, well, by going to futures, I won't be able to do that, you can. You can trade all the major stock markets, some foreign markets, the Dow, the NASDAQ, the S&P 500, the Russell. You can trade commodities, which is what a lot of futures traders do. In fact, a lot of companies do that.
Yeah.
Companies like Cargill, General Mills, they're dependent on the cost of grain, so they will have kind of preset what they're going to pay for grain in the future.
Yeah, we always talk about my favorite lean hogs, but I think I'm going to change that. There was a new contract that came out in the past couple of weeks here. It was actually water.
That's right.
That was actually the running joke that water is the most liquid contract out there. Well, it's actually a contract now. You can actually trade, buy and sell water in the Chicago Mercantile Exchange.
It's a liquid contract.
There you go.
Yeah, no, and that's true. In water, I mean, that's a pretty valuable asset when you think about it. You look at the West Coast and all of the issues they've had there with the fires and everything. So they have a water issue. So that's another one you can trade. Again, a lot of choices there. With the commodities, like you said, lean hogs. Corn, sugar, soybeans, things like that. You can trade oil. You can trade precious metals, currencies, interest rates, a number of different things that you can trade within that market. A great short-term trading vehicle. And then with options, it's kind of a double leverage there, really, because you can control a larger amount or number of shares of an investment for a smaller upfront cost. Plus the return, the percent return with options also kind of has leverage. We'll call it leverage. Basically, kind of a rule of thumb is if the underlying asset that you are trading the option on, it could be a stock, for example, or an exchange-traded fund. If that's up 10%, the option is going to be up at least 100%. And so that's a great way to, again, maximize the value of every investment dollar that you have.
Yeah, you kind of open a can of worms there with the options. I do want to cover that in the next segment, so stay tuned for that. But, with these other assets, the futures market and the Forex market, all that does is spells opportunity. There's so many opportunities that are out there that the average investor is just missing out on. And if you feel a lot of people feel they're diversified in tech stocks, oil stocks, healthcare stocks, all the different stocks that are out there.
Sure.
Well, what happens if the stock market goes down? They all go down. That's why when you have these futures contracts, they're not correlated. So you have proper and true diversification. Corn has nothing to do with what the S&P 500 does.
It doesn't care.
It doesn't care. I mean, corn doesn't really have a brain or anything, but still, the price of corn doesn't matter.
I know some people like that.
Well, that's a whole nother story there. We could do a whole segment on that.
We could.
Let's not go down that rabbit hole. Al, coming up next, I want to get into options, why so many people are looking to use those in retirement, and also different retirement plans. We will be right back.